Welcome to 2024. During the last few months of 2023, there were several bullish predictions about this year. It is touted as the one with immense benefits for the crypto market. Just take a peek into crypto media and you'll see several headlines and forecasts about the market this year. There are general cryptocurrency predictions, but is making investors millionaires one of them? Everyone thinks Wall Street had a phenomenal year, but a closer look at how the crypto space performed in 2023 will make you wowed. As of December 28th of 2023, the aggregate value of all listed cryptocurrencies on CoinMarketCap has increased by a cool 115% from year to that date. It's pretty cool. So far, there have been thousands upon thousands of digital currencies to choose from. However, Bitcoin and Ethereum have done most of the heavy lifting. At the end of 2022, Bitcoin and Ethereum collectively accounted for 58% of the $795 billion crypto market capitalization. But fast forward to the end of December 2023, and these juggernauts were responsible for 67% of the aforementioned $1.71 trillion value of the crypto market. Notwithstanding, it's not about where digital currencies have been, but where they're headed next. Following an exceptionally positive year, there have been several predictions for 2024. So since it's a bullish year, are investors going to be millionaires in this year? But a bull run birthing millionaires is not the only T for this year. There are several reasons why Bitcoin surged more than 160% in 2023. This included positive sentiment through the key US financial markets, the belief that a spot Bitcoin exchange traded fund will be approved by the Securities and Exchange Commission in January, and the expectation of Bitcoin's halving event, which is expected to occur in April of 2024. These were the factors that gave the crypto market a ray of hope. These catalysts have been particularly important. For years, financial institutions have attempted to garner approval to list a Bitcoin ETF, only to be spurred by regulators whose usual claim was that the crypto space was rife with manipulation. Currently, this is the same claim that they've been hammering on. A handful of approved Bitcoin ETFs would allow greater access to the top crypto token through more standard channels. Likewise, Bitcoin's halving event will reduce the block reward given to cryptocurrency miners by 50%, and it is scheduled for this year. Bitcoin has a history of rallying and halving events as it results in fewer tokens being minted daily. However, there was a case when Bitcoin surged over 160% on the rumor of these events occurring in 2024. Hence the hallmark of buy the rumors, sell the news year for the largest cryptocurrency by market capitalization. In addition, Bitcoin continues to fail in the relevancy department. El Salvador's experiment with Bitcoin as a valuable currency has not resonated with its residents. Based on more than $7 billion in remittances transferred into El Salvador from abroad in 2022, a mere $126 million was sent into crypto wallets. The hard truth? Bitcoin's competitive advantages have waned, with other projects leaving its network and utility in the dust. Also, another prediction for the year is that the ultra-popular dog coins, which are notably Dogecoin and Shiba Inu, will continue to underperform the aggregate crypto market. In 2023, Dogecoin and Shiba Inu tokens gained 35% and 36% respectively. And while this represents a better year-to-date return than the benchmark S&P 500, it is well below the noted 160% plus gain for Bitcoin. The core problem with the dog coins is that they are nothing more than payment coins. Thousands of digital currencies could, in theory, be used to pay for goods and services. Usage data also backs up that Dogecoin and Shiba Inu lack real-world utility. Online business directory CryptoWork noted that around 2,500 companies accept Doge tokens, and roughly 900 companies accept SHIB tokens for payment. The wild volatility often associated with meme coins has caused all but an infinitesimally small percentage of businesses to shy away from Dogecoin and Shiba Inu. It's clear, these dog coins cannot make you millionaires. Plus, investors should also be aware of the checkered history of payment coins following mammoth increases in value. With few exceptions, payment coins that rallied by 10,000% or more typically lose 90% or more of their value in the years that follow. Although Doge and SHIB tokens have both met this 90% retracement threshold, there is no reason for their valuations to remain where they are now, with nothing more than enthusiastic social media banter holding up the valuations of Doge and SHIB. An underperforming year for both dog coins is expected. Furthermore, apart from confirming your status as a crypto millionaire, the crypto market may witness another game-changing failure. It is a bitter pill for us to swallow, too. It is quite hard to forget the memories of 2022. In that year, Terra Classic and Terra Classic USD were the disasters of the crypto world. In May of 2022, Terra Classic USD was the fourth largest stablecoin by market capitalization, with Terra Classic being the fourth biggest digital currency by market cap. However, things spiral out of control quickly. Unlike most stablecoins, which use fiat currencies to maintain their peg to the US dollar, Terra Classic USD relied on an algorithm. A large group of sellers in USTC decoupled this peg, which created an arbitrage opportunity that ultimately led to a devastating effect on Terra's stablecoin and Terra itself. Not long after this epic crash, we witnessed the fraud that occurred at the crypto exchange platform FTX. Less than a year after FTX filed for bankruptcy protection, its former CEO Sam Bankman-Fried was found guilty on 7 counts of fraud and conspiracy brought against him. The former CEO of FTX is facing up to 110 years in prison, with a sentencing date looming in late March of 2024. It is difficult for us to kick out the fact that there might be a repeat of these events. Well, this is because the crypto market lacks adequate oversight and has historically been a stomping ground for manipulation, which is precisely why the SEC has been wary about approving a Bitcoin ETF. No doubt it is going to be a great year, but you're going to have to brace yourself. The basics for investing in crypto standards, regardless of the envisaged wild bull run, a buy the rumor, sell the news event, has been confirmed for this year, so there is a need to be careful. Don't buy into the crypto hype. During the previous bull market, there were several articles and news about different people investing their capital into coins that went on to make them big gains. These interesting updates made a lot of crypto investors curious to know which coins were going to pump next. If you have been in the crypto industry for a while, you can tell that this curiosity upgraded to people buying popular crypto coins. To buy the crypto hype is when investors put all their money into assets and buy coins because others are buying and talking about it without doing any research. Instead of buying the hype, you can be different. Do your own research and check out assets with a solid community of people who not only talk about its market price, but they believe in how useful the project itself can be. As noted earlier, several investment firms, including heavy hitters like BlackRock and Fidelity, are queuing up to launch a spot Bitcoin exchange traded fund in the US. These funds would track the price of Bitcoin, making them the closest thing to investing in the crypto token directly without dealing a crypto exchange or storing crypto manually, a process normally fraught with risk. After a bruising 18 months in which the crypto prices buckled, high-profile businesses collapsed, and 2 crypto figureheads were convicted of crimes in the US, the crypto industry is supposed to be cleaning up its act and getting set for a refreshing year. The fact that the SEC appears to be entertaining a spot Bitcoin ETF after the years of resistance is seen by some as a signal that crypto is moving beyond its freewheeling years. It is greatly lauded since it could trigger a millionaire move. According to Samson Mow, a prominent Bitcoin evangelist and CEO of Bitcoin-centric technology firm Jan3, the arrival of such a fund in the US is a significant milestone as it will allow investors to hold Bitcoin through a conventional financial product for the first time. While there is a broad consensus around the likelihood of an ETF approval among analysts, the idea is that it will be symbolic of the industry's coming of age is contradicted by a frenzy of speculation around what will happen to the price of Bitcoin. This is why we need to be cautious. Samson Mow added, there's always the possibility that people are hyping it up for their benefit. He doesn't believe the broader crypto industry, which he considers to be separate from Bitcoin and described as a gift, is capable of cleaning up its act. The crypto industry will be churning out FTXs, and people will keep investing because it's a spectacle, he said. Regardless of the looming spice, the crypto market remains widely volatile and should be handled carefully. However, that expert added that people hear the siren song and buy in. Investing in crypto can be exciting, but many new investors fall into common traps when it comes to trading and investing in cryptocurrencies. It's a great year, that's a guarantee, but we shouldn't let our guard down. So, with that being said, that's going to conclude today's video. Make sure you click on subscribe notification buttons, and we'll see you in the next video.